afternoon. It's Gene Inger. Just a quick pre-close comment here on IngerLetter.com last night and throughout the day here on the MarketCast intraday comments to our trading-oriented short-term participants. We've indicated the vulnerability of this market, and we thought, I'm looking at candlestick charts, and I've put on it a standard deviation envelope this time just to put some perspective on all of this. And you can see this upside panic, which I thought was an upside capitulation, came down. People shorted here on the ridiculousness of a rally on the CPI. Then they ran them in after the dip, then they took them down, then they took a swing rule to a slightly higher high. Top of an envelope, incidentally, came down, rallied back to sort of a standard deviation mean. I do not typically use these during the day, but I just wanted to show you this because since then we've been staying and crawling along the lower parameters of the envelope. And when you look at this on a daily basis, chart perspective, all we've done is hold above the standard deviation mean, and now I think there is some risk of rolling that over and heading down. Certainly the psychological point of the 1500 area in the S&P would be considered by most as being important, and I think we break that, we could drop precipitously into the upper middle 1400s, and that's what we want to keep an eye on. For now, back to our intraday activity here, as this is the intraday comment. I'll be back with the IngerLetter.com final later. We are on the short side, well, that happens to show you the NDX at the moment, which is down about 1180, and the pattern activity is somewhat similar, though you never had a higher high as you did in the S&P earlier. Meanwhile, going back to that S&P futures June contract, we're holding from 1519. That will be an overnight position effort for traders and position players, I believe. If you are a trader and you want to trail for example, a 5 or 6 point stop and be done with it for the day and tighten it up to a 3-pointer 20 minutes before the bell, 10 minutes before the bell, a 1-pointer or closing bell, so be it. But I would not be surprised, given housing numbers and other data, that tomorrow gaps down, sort of the inverse of today's upward action at the beginning. So whatever you think, but we don't give trades, just our own ideas, and our perspective is to maintain bearish big picture positions. Now, we are not short the market. We have not embraced the what I consider ridiculousness of others who said sell everything and go away, or did that, and I think they've missed the boat. We've had a couple small stocks that have done well. One went, as you know, almost 100% up, and then that was Inksure, and then we sold that, and now it's fallen about in half. We do not own it. We may buy it back at some point in the future. Then there's the little coal cleaning and pollution stock, and that one went up nicely, and we indicated we thought it would set back, and it's been doing that. So we will look at these accordingly, and we're just sort of biding our time, speculating these smaller stocks, which, by the way, have been doing excellent, while cautioning against taking a stock like a Whole Foods or something, which we warned about for months, and selling or shorting it, as some are suggesting, after it went down half price from where it was 6 months ago. That doesn't mean it can't go down a little further. It means the cream of the move down, just like the cream of the move up, say in an Apple, for example, is behind, not ahead. So it's a market of stocks, not a stock market. But as far as the S&P and the Dow, on which we were sometimes alone bullish for the better part of 5 years on the upside, we are increasingly worried about, and we're going to hold this short sale, as noted, with nothing other than a break-even stop for now. If it comes out, it comes out, and we'll look at it tomorrow, and we'll comment on it in tonight's IngerLetter.com final report. The Dow currently up 54 points on an intraday basis, and when we look at this quickly on the candlestick charts on the daily basis, we can see what has the overtones of being spiky, a trend accelerating above the preceding channel angle, and that is basically, I don't want to say it's insane, but it's the kind of thing that can be fraught with peril. And at an Atlanta meeting today, and I think that shook the market a little bit, you had a couple Fed members making some comments about credit derivative risk and so on, and I don't think this got much play. Transports are up 22 currently. That's on a daily basis chart. Here we are on an intraday chart. Semiconductor index is down 5.5. The dollar finished down 0.32. And here we go, and the bonds finished down 8 ticks today, and crude oil up 66 cents. We will look at all of this more on the final report tonight. Good afternoon.